So, okay, thank you, Erin. So yeah, back to introducing you all to Christy. Christy is a CPA. She's going to give us some tips and tricks and ideas, things that we can do to be really organized for tax season this year and just make the most of everything that we've got. So please help me welcome Christy McClurcken. Thanks, Christy.
Thanks, Lori. Nice to see you all. And I don't really know what all your backgrounds are, so I'm just going to kind of start with some bare basics on business ownership and tax planning. So you guys are all receiving a 1099. At the end of the year, when you get a 1099, nobody withholds any tax. It's just whatever you were paid, that's what the 1099 says, and that's what you report. And generally, you will report that on a Schedule C if you're a sole proprietor, which I'm guessing most of you are. And you can offset that income with various business expenses. And I'm just going to highlight some of those. It's really obvious if you're buying stationery or snacks or using your cell phone for business, that kind of stuff we all kind of know about. But there are ways you can bring that number down, that taxable income number down even more. And so I'm just going to give you some ideas. And then I'm going to tell you, if you have more questions, I'll direct you to my Facebook page. If you guys have Facebook, my company is called Timely Tax and Accounting. And you can check in with Lori and get my email directly. If you are on Facebook, I try to put like articles out there that talk about, year-end planning deductions and what's new for retirement planning and what's the new standard mileage rate and things like that. So just giving you some hints and background. And it's always a good idea to start thinking about taxes prior to year end, because once January comes, there's not a lot you can do. You're still in December now. So if you're having a bang up year with your business, you brought in a lot of income and you say, oh man, I'm going to owe tax and I haven't done anything to prevent it. There are some things you can do by year end. So that's where I come in. So I didn't prepare like a PowerPoint or anything like that. I did make like a few, like about 4 tips here just to kind of give you guys some ideas. First of all, from the get-go, if you've never owned a business before, just some basic record keeping tips. Some of you may have a method of keeping track of your business income. Maybe you have a separate checking account where you deposit the money you earn into, and then you have a card or either a debit card or a credit card, or maybe even just some checks to pay your business expenses. And that's great because it just keeps everything separate. It's a little bit easier at the end of the year if you're using an accountant or you're doing your own taxes to pull all those expenses together. It's not required. You can run it through your regular checking account, but then you have to go through and pick out what's business and what's personal. So if you do it all in a separate checking account, which a lot of the banks, you don't even have to say it's a business account. You can just get another checking account and use that specifically for your businesses. A lot of people tend to keep track of their business income and expenses on like an Excel spreadsheet, which is fine. Generally, your accountant, or if you're doing your own, you'll only need your totals. So you'll need your income at the end of the year, and that 1099 will have your income on it. And then you'll need to have totals for things like supplies, possibly cell phone expense, travel, mileage, things like that. So if you have an Excel spreadsheet and you're incurring these expenses all year, you can total them up at the end of the year and then have your taxes. Another way to keep track of things that's kind of not super complex and not super expensive is to get a program like QuickBooks. They have like a QuickBooks Self-Employed. I believe it's even free if you're pretty simple. It's like an electronic checkbook. You can sync it up with your bank account or your credit card. And so as you incur expenses or income, everything can download into that. And then you can have reports. So at the end of the year, you'll actually have a profit and loss statement showing all of your income and your various expenses. And if you're keeping up with it and classifying things through each month, your books are essentially done for year end. So I am a QuickBooks certified pro advisor. I deal with the software. I help people get set up. It's really not rocket science. It's pretty straightforward. QuickBooks is a program that's made for non-accountants. So if you get stuck on it and you have questions, you can probably figure it out on your own, but I am available if that's something you'd like to do to kind of simplify. And also if you'd like to see reports, on a monthly basis as to what you're earning and what you're spending and that type of thing. Okay, so that's topic one. Topic two is common business expenses. Mileage is one. Does everybody know you can deduct mileage if you drive for your business? Okay. You can do, the IRS gives you a choice of doing your actual expenses or a standard mileage method. And so what you do is when you're driving your car, you would take actual would be all of your gas, all of your oil changes, if you have to get new tires, your depreciation on your vehicle. And what you have to do is you have to allocate that, if your car is your only vehicle, the percentage of business use versus personal use. So if you drive, say, 15,000 miles in a year and 12,000 of that is personal, that's about 80%, right? 20% of those actual expenses are something you could deduct against your taxes for the year. And if you say, wow, that's way too complex, I don't want to keep track of my gas and my oil changes and my maintenance and my depreciation on my vehicle, it's just a pain in the rear end. You can do what's called the second method, which is standard mileage. So for 2020, our current year, the standard mileage rate is 57 cents a mile, 57 and a half cents a mile. Yeah, it's kind of odd. So for instance, if you drive 1,000 miles in a year, you take 1,000 times 57.5 cents and you get to deduct that against your income. That amount is going up for 2021. It's going to be 58 cents a mile. So all you really need to do is estimate. You can actually track the miles that you drive. You can keep a little log in your car if you're going, say, to the bank for business banking, or you're going to an event or a training. A lot of our training is online now, but if you do go to a in-person training and you drive your vehicle, you want to keep track of that. Or you can estimate it. You can do like 1 month's worth. I tell people, I'm not perfect either. I take, one average month. And if I drive on average 500 miles for my business in the month of March, I take that times 12. And that means I drove about 6,000 miles a year. And then I keep track of my beginning and ending odometer reading. And I take that 57 and a half cents times the number of business miles I drove. So that gives you a pretty good deduction just for not even laying any cash out. So I would encourage you guys to start tracking your mileage. You can also get a little app on your phone called Mile IQ. It's either free or very, very affordable. A lot of my clients use it. It's kind of like a GPS detector when you're driving. When you arrive somewhere in your car, you swipe one way. If it's a business trip, you swipe the other way if it's personal. And that'll allow you to track your miles automatically all year. So keep track of those miles because that can be a good deduction that you may not have thought about. In addition to anything else you buy, like supplies, Christmas cards, any kind of meals. If you take a potential person that you're going to do business with out to dinner or out to lunch, I know we're not doing a whole lot of that dining out right now, but as we get through the pandemic, hopefully that picks up again. Meals and expenses like that are deductible up to 50%. So if you go out to dinner with someone and you spend $100 on a meal, you get to deduct 50 of that. So just keep your receipt, note a business purpose on it, and that will be adequate enough for you to deduct things like that on your taxes. So a lot of times people say, oh, I don't want to worry about that. It's too risky. It's not risky at all. If you have a business purpose going out with a client or a customer for a meal, whether it's coffee out or a fancy steak dinner, you're allowed to deduct that, just 50% of it. So keep that in the back of your mind. Retirement funding. As self-employed individuals, you can also fund your retirement. It depends if you have another job during the day, like I have this tax practice that I do, and I also have a day job where I work for someone else. So I have to be careful with my retirement because if I'm participating in a simple IRA or a 401k through my employer, my self-employed retirement funding will be limited. But if you have no other job and this is the only thing you do, at the very least, you can put $6,000 a year into an IRA account and you can deduct that on your tax return. And Lori will tell you, she's done it. It saves you a substantial amount of money, both for federal and state taxes. And the real beauty of that is you don't have to do it today. If you say, hey, I haven't done anything all year for 2020, and I want to fund that for the year, you have all the way up until April 15th of 2021 to put that money into an IRA and take a tax deduction on your taxes for the current year. So that's a really good planning tool. If you are making more and you want to put more away, you can also bump that up with other things such as a solo 401k account or a SEP IRA. These are all a little bit more sophisticated, but they allow you to put more into a retirement account. So if you're interested in something like that, I won't get into the specifics, but just be aware that because you are a business owner, you can fund retirement this year. Also, I want to say point number 3 is strategies for saving more by year end. You know, we talked a little bit about mileage and recording that. We talked about retirement funding. If you need something, if you need, okay, say you need a brand new computer or a monitor or a printer, scanner, fax machine, anything like that. If you want to buy it, if you're on the fence whether I should buy it this year or buy it next year, if you have income to offset it, it might be a good idea to get that purchase in before the end of the year. And what's really cool is if you buy it on a card, let's say you go out on December 28th, you're doing your post-Christmas shopping, and you find a really good deal on a laptop computer, and you're going to spend $1,500, and you're going to put that on your credit card, and you're not going to have to pay for it till the end of January, for instance. You still would get to deduct that in 2020. So accelerate any expenses that you might have or things that you could potentially deduct prior to the end of the year. Make sense? Okay, those are kind of the highlights I have. I can open up for questions if you have time, Lori, or I can again just tell you guys. I do have my email is cpagirl41@yahoo, and you can get that from Lori if you do have questions. I'm also not opposed to someone getting my cell phone number, Lori. If anybody does, just say, hey, something you said triggered something with me. I'd like to get a little bit more information. Or you can check out my Facebook page. That's on Facebook. It's called Timely Tax and Accounting. I would love for you guys all to follow it. It'll just make it more active. And I'm just getting it going again because I just left one company and I'm starting with another company. So I'm really trying to build my business. This is going to be my retirement plan. So in 3 years, I will be only working for myself. No other company will be involved. Hopefully I'll have my son doing taxes for me by then full time, and I will have grown enough to leave my company and be fully self-employed like you guys are. So any questions, or you guys have time, or I can just get off now? And
No, we definitely have time. I would say if you have a question, you can just unmute and ask. I want to say thank you so much. You guys, Christy has literally saved me in more ways than I can tell you. She's got such sound advice and she's always available. She's just an incredible resource. Go like her Facebook page. Cheryl was kind enough to put it in the chat. Just jump over there and give her a like. And then I put her email in the chat. So I'm going to shut up. It looks like Kathy might have a question.
Yeah, Christy, I actually do have some questions.
uh-huh.
So I've just bought a wine refrigerator to store my wine so it's at the right temperature. Is that a potential deductible business expense?
Absolutely. Yeah. All IRS says in the way of expenses is it has to be ordinary and necessary. So that would to me be completely in line with what you need for, it meets those criteria. So you could absolutely deduct that.
The other question I have is, if you're courting someone to join the business and you give them a bottle of wine to try to get them on board, is that a deductible expense?
Yes, very much so. Yeah, anything that you are spending out of pocket, ordinary and necessary in the course of doing business, which samples, you know, any kind of gift, you know, if someone signs on and does something with you, does a business event with you, and you send a, you know, a basket of flowers or some chocolate or anything like that, as long as it's ordinary and necessary in nature, yes, you can deduct it. So track all of those items.
I
Thank
deduct
you.
all of my wine purchases
Yeah.
because I am purchasing wine for my business, whether it's to taste it, share it, pour it for somebody else, whatever. I deduct all of my, and not just one hope. You know, if I go to a winery and I buy wine, I am literally researching that wine. So I deduct all of my wine purchases.
Okay.
So yeah, that's a great question. Great question. Cheryl, it looks like you have a question.
I do. Christy, you mentioned receipts a minute ago. Is it crucial to save receipts, or do credit cards, you know, like your credit card statements work?
That's a great question. I'm a big fan of receipts just because they back up. You know, I mentioned if you go out to dinner, your credit card might have, you know, 15 items that are dinners out. And if you say, hey, those were all business and they're all within a 3-day period and you were in Vegas, that's probably not going to fly. But what I do is I take my paper receipt from the restaurant, and let's just say I have gone out with Lori and we're having lunch and we discussed some tax planning or getting her caught up for the year or doing an event such as this. I just write on it, you know, Lori, dinner with Lori, and it's already date stamped. And I take a picture of it, or I have one of these little card scanners, because a lot of those receipts are thermal in nature and they will go away if you get them too warm or if they get in sunlight. So if it's a business expense, I like to keep it, not necessarily the paper, but I like to scan it in and have it for my records, just in case I'm ever audited. Now, in the 30 years or so I've been doing tax returns, I've only actually been through 3 audits. So it's really few and far between. But you just don't want, you want to protect yourself and you want to have your own backup. So anything that you purchase, I would consider it just kind of a safety thing to have those receipts. The credit card statement is good, but the receipt actually shows the item. You know, if you go to Best Buy and you purchase a computer, all that's going to show on your credit card is actually Best Buy and the $1,500. Where if you have the receipt, it's going to list out the item. So if the IRS were to come in and audit you, you would have a little bit more backup, a little more substantiation.
Well,
Okay,
that's another thing I was thinking about is when you give the wine away, you probably should have some record of the conversations that you had, who you had them with, when you had them, and then the follow-up when you gave the wine.
I think that would be a smart idea, just to, yeah, kind of document yourself, keep track of what you're doing. And it doesn't necessarily have to be a super fancy documentation, you know, just like a mileage log. It can be a calendar, and you can say that I was here on this date and I drove, you know, 40 miles and I gave away, you know, X amount, $40 worth of wine or whatever. I think that would be really handy just to have that as kind of your backup.
Thank you.
Yeah, I use a paper calendar, and that's kind of what I go. That's what I use because I'm that girl, and I just use my credit card statement. But I can back it up because I also do this paper calendar, so I know. Oh, I had lunch with Christy on this date, and we went to Seasons 52, and so I know, right, that I have all that information. But yeah, I've always been that's. You know, my purse is full of receipts, but they are thermal and they go away, and I'm not a good record keeper. I'm going to look into that QuickBooks though. That I did that 100 years ago when it first came out. But that was a great tip. Great tip.
Yeah, and it is available online now. So if you just go to quickbooks.com, it'll have different options. And there's one that's called like QuickBooks for Self-Employed that's very, very affordable. And they may even offer a free version if you don't go over a certain amount of customers or vendors. And essentially, it's a really nice tool. I support it. I have a lot of clients using it. I have landlords using it. I have self-employed business people using it. And it's really nice because if you sign up for your own QuickBooks account and then you use a tax preparer, you can invite the tax preparer into your books. So I could go in and look and say, hey, I see that you have, you know, you don't have anything in supplies. And last year we took supplies. What's going on here? And so I can actually help you advise and clean up your books that way. So just keep that in mind too, but that's a really good tool. And again, if you get a QuickBooks online subscription, that is a deductible business expense. So you get to take that off on your taxes as well.
Love it. I'll tell you what, man, and Christy keeps her cool. Girl keeps her cool. I do not keep my cool, but I have had to reach out to her a few times in a panic, and she is on it. Are you seeing this stuff? Because I don't know if it's going in the waiting room. Are you seeing the stuff I'm posting? Yes? No? Shoot, man, that's a bummer. Everyone in meeting. Okay, here we go. Here's the link to QuickBooks. And here's the link. Well, Cheryl posted that. Here's the link to MileIQ. MileIQ is amazing. You always have your phone with you. It's always tracking where you go. And literally it's swipe right, swipe left. So that's a really cool tool. And then I want to just post Christy's Facebook again.
Christy, can I ask you also? So if I do a contract like for a bridal fair or that I'm doing with my wine, that's tax deductible as well, correct?
Yes, definitely.
Is it 50% or would it be the entire, can I claim the entire?
What is the cost? Is it a meal or is it like
No.
a registration fee?
It's a registration fee.
That would be 100%. Yeah,
Okay.
most everything is 100% business deductible. Meals are the only things that IRS limits to 50%.
Okay, thank you.
Awesome.
All right.
Anybody else have questions? Christy, thank you.
You're welcome.
Lori,
Thanks
this
for
was
joining me.
fantastic. Christy, thank you so much.
Awesome.
You're welcome.
Thanks,
you ladies
guys.
have a great holiday. And
Yeah,
thanks for having
thank
me
you.
on.
Thank you
Thank you
very
so
much.
much.
Christy, I'll talk to you soon.
Okay, sounds good.
Thanks,
Bye.
everybody. Have a great night.
Thank you. Bye-bye.
Bye.